Let's move into the financing and funding types. We'll move a little bit more quickly here. So to clarify some terms that you'll hear in the process, costs are generally considered to be the purchase price, the closing costs, and the inspections and appraisals. Those are costs that are typically incurred by a buyer when they're looking to buy a house. All of them have to be funded or financed. The purchase price usually consists of a down payment. That's cash from you. That's the down payment, and a loan. Most people are not doing cash purchases. Whatever you're hearing in the media is not true. Most people are not bringing all cash to deals. Does it happen? Yes, but it is very rare. Even investors very rarely bring all cash to deals. There's a little nuance in that, which I won't spend time on, but most deals are made up of down payment and a loan. You want to remember from a cash management standpoint to account for the closing costs. So you're buying a house for $500,000, you will have a down payment and a loan to equal the $500,000, but there's closing costs stacked on top of that that you will usually need to handle for cash, but we will talk about some other ways that you can do that in just a minute. So when you're talking about loans and down payments and how much do you need, there's a number of different typical programs that you can go for. 97% loan, 3% down purchase. That's an FHA program, very popular, great for first-time home buyers. They have a great rehab loan product as well if you want to do a value add, and you can do them on 2 to 4 unit properties. It's a great way to get into a property. Even if you have a lot of money, you can do it with a little bit of cash and keep more cash in your bank account. Very similar with a 95.5 property. When you do a 95% loan and 5% down, that can save you some money from interest rate and private mortgage insurance versus FHA, but it can be a little bit harder to qualify for. The most typical process that everyone does is an 80-20, where you put a 20% down payment and get an 80% loan. So a $500,000 house would be a $100,000 down payment with a $400,000 loan. That equals the 500,000, and then your closing costs are on top of that. If you're an investor trying to do a deal, usually you're going to be capped at 75% loan amount or loan to value with 25% down. There are some 100% loan programs out there. The VA does 100% loan, which is awesome. Love VA loans. Those products get people into houses. They also have a rehab option for them, and USDA loan, which is not nearly as well known by people. It's designed for more rural properties. It's USDA rural loan, but you can do custom construction. You can buy vacant land and build your dream house using a USDA loan. So it is really cool. It has some unique qualification stuff, but it is a great loan program. We are actually I just became aware of a new 100% loan product that has no private mortgage insurance. It's killer. I'm super excited about it. I'm still reading through all the information on it. I'm going to be doing some more stuff for a project that we're selling in Seattle right now that I think it is a great fit for. It has some geographic restrictions, but you can get into that house into that type of loan with truly zero cash. I mean, zero cash. You bring no money to the deal because you can do 100% down. The lender will give you a $5,000 credit, and the seller can pay up to 4% in closing costs. So in the property that we're going to start trying to use it for, you can get almost $30,000 in prepaids and closing costs and interest rate buy downs with 100% funding. So you can be in this house $0 cash. It's an amazing product. I'm so excited that we found it, because normally you have to pay the down payment and closing costs in cash. And a lot of people don't have cash or like to keep their cash in the bank. That's what I like to do. I like lower down payment programs because I like to have my cash and not have it sunk in a deal in case something happens, in case I want to go on a vacation, in case I get another opportunity. I like to have it, so I don't mind making a little higher monthly payment to be able to have access to the cash. And being able to get into a house with no cash, with no mortgage insurance, 100% financing is an amazing deal if you like to keep some money in the bank for emergencies. Another thing that can help you keep some money in the bank and help you manage your cash are the grant and down payment assistance programs. And welcome to those who are joining late. Glad you're here. Thank you for making the time and making your journey into home ownership a priority. But you can do grant and down payment assistance programs. There are some challenges. Not every lender is good at them. Not every lender likes to do them. There's more paperwork. There's a lot of qualification stuff that you can do. Sometimes the appreciation that you can get is capped, but if it can help get you in the real estate game, then it is a great way to go. A great organization for you to do some research with is called WashFIC, Washington State Housing Finance Commission. I put their website there on the screen for you. They have some really amazing programs. I've been fortunate to work on some custom programs with them. Some of the built green development that I was doing a few years ago. Great organization, great opportunity. They can get you grants, down payments, gift funds, pretty crazy, creative second mortgages that you can do. Really cool resource. Couple other ways that you can get some help with down payment or funding your property are seller, agent, or lender concessions. I mentioned the lender concessions a little bit with uh the loan program that we have. We actually now have two lenders that will do a $5,000 credit on that particular project, and we can apply that to a few other projects that are around as well. So that's 5,000 in free money right there. The seller can contribute some money potentially. I love creating seller concession structures for people. Again, keeping cash in their pocket is the thing that I really like to do. And the agents can offer some concessions, which we have been known to do on occasion. Those can come in the form of cash or other things. Right now, we've got a deal closing in a few days that we're buying a washer dryer for as part of the concessions to try to make the deal and keep everybody happy. So that's another way that you can get some help with funding the down payment, closing costs for your transaction. And the last one that people usually use is gift funds. Doesn't have to be a family member, but is typically a family member. Has to be a true gift. Some people have got in trouble because they've tried to get cute and say, oh, say it's a gift, and then we'll record a mortgage afterwards. Well, that can make you default on your first mortgage, create instant foreclosure, could become mortgage fraud. So don't do that. Gift funds are a great way to go. If you can get a true gift, it needs to be a true gift. There need to be some documentation of where the funds came from. There's usually a gift letter, pretty straightforward. Your lender that you're working with can help you navigate that if a gift is the thing that you are interested or could use in your home buying process.